Good morning. It's Sunday, February 9th, 2025. It's just after 11 a.m. on the East Coast, and this is Rob Sin at CEO Technician on X, at Goldfinger on co.ca, and this is Goldfinger Capital on YouTube. It's Super Bowl Sunday. Big day for Chiefs and Eagles fans and football fans more broadly. And I'm a big Eagles fan, so this is a big game day. But it's always important to do the weekly video and look at charts on Sunday mornings. So here we are. As you can see, I have a abundance of tabs open, and I just kept adding to my bullet points this week, as is often the case. But here we go. Let's get right into it. Talking about the broader market, first of all. So, record weekly inflow to equities. And you can see over here, you can squint and sort of use a microscope to see that the inflows to equities the last 3 weeks have been strong, very robust. It's not just ETFs, it's single stock equities as well. And actually last week it was the biggest ever inflow to single stock equities in history. So that's significant. And it's especially significant when we look at the charts of SPY, QQQ, IWM. They're really not going anywhere. They're stuck in neutral here. Yeah, we had a little pop there in mid-January. The S&P actually made a new all-time high, but it was not confirmed by the Russell, by the Nasdaq 100, by a bunch of different subsectors of the stock market. It was a major non-confirmation during this high. So when I put on my technician hat and I see record inflows into equities, overall investor sentiment is pretty bullish. And just anecdotally, what I'm seeing out there, there's a lot of risk taking. A lot of it is focused in AI stocks, in crypto, in meme coins, in MicroStrategy call options. By the way, check out the option premiums on MicroStrategy. And just sort of the casino that is going on behind the scenes in the MicroStrategy options market. This is a big casino. Not too many people are paying attention to it, but there's option premium there. I mean, the guys who are making the book in those options, the market makers who are selling that premium, it's pretty lucrative. So there's a casino mentality out there across the stock market, across crypto markets, across shitcoin, meme coin. Dave Portnoy is back at it out there, doing whatever with shitcoins, right? This is not healthy market participant behavior, shall we say. But maybe it hasn't been healthy for 5 years, so maybe it's just more of the same. It's hard to say. It's hard to really gauge the sentiment out there, but let's just keep it simple, stupid. Record weekly inflows to equities, and the big indexes and many of the most important sectors of the market, like transports, like technology, are stuck in neutral. And actually on Friday, we pretty much closed on session lows in equities. And yeah, it's just a big non-confirmation, lower highs. So while money is pouring in and risk aversion is being thrown out the window, we've got some yellow flags, some potentially bearish signs starting to mount out there in equities. Now, that being said, I could say this today, and Tuesday or Wednesday, the QQQ could close at 540 and we could all look silly, right? So, anything can happen here, but I'm just pointing out that there are some yellow flag warning signs out there, and especially like Apple was one of the leaders, obviously, in 2024, was definitely the leader in Q4. I mean, it had a tremendous performance after the election from 220 to 260 for a multi-trillion-dollar market cap company. That's a powerful performance. But now look at how Apple has begun 2025, and look at these big red candlesticks that have formed, and another one on Friday. And so when I see this chart, I observe a bearish character change here. I mean, definitely, it's no longer in an uptrend. We can definitely assert that, and it's starting to carve out of a bit of a downtrend, quite frankly, and the moving averages are starting to roll over. Relative strength is in bearish territory. So whatever positive catalyst that Apple had in Q4, well, that has definitely been flipped on its head, and it certainly could have to do with looming tariffs on China and just how China is no longer such a strong market for Apple and even for Tesla and maybe for all American companies, quite frankly, right? So this is a bearish change of character, and this is a market leader. So we should take note of that and add that to the yellow flags, the mounting yellow flags. The overall health of this market is starting to deteriorate. Tesla, so this was obviously a market leader at the end of 2024, and for obvious reasons. Mr. Musk is the CEO and founder of the company, largest shareholder, and he's basically the vice president of the United States right now, right? So the stock more than doubled. So again, this is like a $500, $700 trillion market cap company that more than doubled in a couple of months in 2024. So, the market had its run, right? Like people who were long stocks, especially mega cap tech in Q4, made a killing. But now we've turned the page to a new year. Donald Trump is now president. Oh, I said that. Let's call him Tariff Man. Let's call him Tariff Man so that the algo doesn't downvote me. We're in a downtrend now. So Tesla's in a downtrend. No, it's not. It's not a extreme downtrend. It's not falling off a cliff, but from 488 to 361, I would say that's a downtrend. It's definitely taken a haircut. And that's another yellow flag. Again, we have this risk-seeking behavior among market participants. We've got record inflows to equities. We've got bullish sentiment. Tesla's in a downtrend so far in 2025, right? And, who are the leaders? Well, one of the leaders is Walmart. Walmart is a leadership stock. Walmart's gone from 65 to over 100 since August. That's a huge move in, whatever it is, 400 billion market cap, Walmart. That's an enormous move. Is Walmart a risk-on stock? Is that like when the economy is booming and the Fed is cutting interest rates and people are happy, you buy Walmart stock? Probably not. When you get a little more risk adverse and want a little more safety with a dividend, a little less sexy, you buy Walmart, right? And so this is a consumer staple, right? So staples are what portfolio managers put their portfolios into when they're not as bullish, when they want to be a little bit more cautious. All right, so let's chalk that up to a yellow flag. Okay, so anyway, that's the broader market. I don't think you can be super bullish here, quite frankly. And I think the smart move is to probably have one foot out the door. This market could roll over. Tariff Man Friday. So clearly we have a trend now, a couple Fridays in a row, where Tariff Man comes out and starts talking tariffs, right? And they tend to do this on weekends because they know the market is closed. And all politicians, especially Trump, are very aware of this now, that let's talk tough, do our bombings or whatever we need to do, talk about tariffs on weekends, and then we'll give the good medicine on Monday. So there's a bit of a pattern formed. It's still early. And I do imagine that maybe by March or April, the market will get numb to this tariff talk, right? We'll have heard so much about it. We'll understand it a lot better. The market will have strong expectations that will be pretty firm for what the tariffs are going to look like, and it will just be numb to any of the tariff talk, right? And so when we look at what do tariffs actually mean, well, they're definitely going to be a headwind for growth. I think we can all agree on that. Growth in the U.S., growth in China, growth in Canada, growth in Mexico. It's a headwind. They're not positive for the economy, but they're being done with the intention of rebalancing some of these big imbalances that have grown larger over time, right? Trade deficits. The U.S. has an enormous trade deficit with China. And so what does a 10% across the board tariff mean on China? Like, what does it mean for the economy? Well, here's one look from Goldman Sachs. A 50 basis point headwind on GDP in 2025. But then notice how when we get to 2026, it really becomes quite small. I mean, 10 basis points or even less as we get deeper into 2026. So it's a big headline now. It's going to hurt here in Q2, Q3 2025. But then as time wears on, I think people will forget about this, right? So we definitely have headwinds here in the near term, and that could be something that knocks stocks down, right? So we're talking about those yellow flags that are mounting in equities. Okay, so if this happens, if this actually plays out and we get these 10% tariffs on China and they start to bite, China counters with more tariffs of their own. Certainly, if it escalates further past 10%, we have some serious headwinds for stocks here in 2025. And then what are we seeing in metals markets? So I have this copper chart up. So this is clearly a big portion of this early 2025 rally in copper, from $4 a pound to $4.60 a pound. That's a 15% move, folks. 15% move in copper is a big deal. Has to do with tariffs, right? And this is from Citi. And basically, one of the big takeaways from this is that the metal in the U.S. is trading at a premium to the metal non-U.S., and that could widen, right? So, let's say it's a 5% premium right now. I mean, that could widen further. The tariffs are mainly focused on base metals or platinum, potentially silver, because they are, industrial metals, not gold. Gold is a monetary metal. It's an investment metal. Yes, it has some industrial, uses, but gold is a monetary metal. It's an investment metal, first, second, third, fourth, fifth, right? Whereas copper is an industrial metal, first, second, third, fourth, fifth, and a platinum, and palladium more on the industrial side for sure. They're used in the automotive industry, right? So these metals, so all the metals except for gold, definitely metal in the U.S. trades at a premium to metal non-U.S. And I want to talk a little bit more about that and what the implications are could be for the mining industry. But let's keep going with this. So copper broke out at the end of last week. This is significant. Okay, this is very substantial. And I also think that we want to pay attention to, I don't have it up because again, I have so many tabs. I didn't want to put everything into this, but go back to my presentation on China and the US and the yield curve from January. And we're in that bear steepener in the yield curve, right? And actually, it's the point in the cycle where it's a bear steepening boom. And so what do you want to own during a bear steepening boom? Commodities. You want to own copper. Okay, copper would be one of the go-to trades in a bear steepening boom. Well, it's happening, right? It's happening. That was a double bottom that was put in place the first week of the year. $4 a pound. That's a powerful chart pattern double bottom. And we are moving up off of it. So look, it's been a big move, 15% in a very short period of time. So I'm not making this video saying to chase copper at $4.63 a pound. But what I am saying is the tailwinds are here for copper in 2025, regardless of whatever tariff stuff is going on. And certainly copper in the US is going to trade at a premium. I mean, that's very clear right now. We've seen a lot of metal rush into the COMEX, and that metal will find its way into the into the industrial economy, into goods that are produced in the U.S. And then, what about metal in the ground, right? So mining deposits, mining projects, ore bodies in the U.S. And I think that's a theme that we're going to start to hear more about here in 2025, right? It's still kind of early in the year. There's been a lot that's happened in a very short period of time with the new administration. And I think that portfolio managers and generalist investors are going to wake up and say, oh, hold on. Copper and silver and nickel, et cetera, trading at a premium in the U.S. So if we can mine it and process it in the U.S., that's going to be worth more than if we have to buy it from overseas, pay tariffs, and ship it to the U.S., right? You have to pay the tariff, you have to pay the transportation costs, et cetera, right? So suddenly there's going to be a refocusing on U.S.-based mining projects, right? And so just two examples of this would be Trilogy and Northern Dynasty. I'm not sure if I have the Northern Dynasty. Oh, here it is. So these are both in Alaska, right? Like both projects are in Alaska. Trilogy, I believe, is the one that has a much greater potential of getting permitted. They need to build a road, the Ambler Road, 211 miles to their projects. And then Northern Dynasty, well, they have the Pebble deposit, big porphyry copper gold deposit, but there's a lot of environmental pushback, and I'm not even sure with the new administration that they'll be able to get through it. But just the fact that Northern Dynasty has more than doubled since October on the prospect of Trump, winning, and then he did win. That speaks volumes because this is not a small market cap. We're talking about 400 million market cap in the U.S. on Northern Dynasty. So 400 million for a project that has pretty low probability of getting permitted. That's a pretty hefty price. Whereas with Trilogy, you're looking at about 200 million in the U.S. And well, the chart is bullish. This is a bull flag pattern. And I think that they have a much higher probability. Also, copper, gold, and a few other metals as well. And so I think if there is a trade, the trade for me would be on Trilogy, not on Northern Dynasty. But also just more broadly, start looking at other projects across the U.S. So I published this last week, the Idaho Porphyry Belt, big discovery in October 2023, porphyry copper, deposit or potential, deposit. The Hercules project. So it was silver. It was supposed to be a silver project at first, but the story has transitioned much more to the porphyry copper side. There is still a lot of silver at Hercules, but the bread is buttered, so to speak, with the copper, and that's what the market is focused on. Barrick Gold, read the story. Part 2 will be coming later this week. Barrick Gold made a big investment into Hercules and into this region of Idaho, staking a whole bunch of ground across this belt. And actually, it was Barrick, not me. Barrick dubbed it the Idaho Porphyry Belt, and I just went with what they're calling it, right? So the Idaho Porphyry Belt, dubbed so by major gold producer Barrick Gold, who has the biggest land position in this region of Idaho. And definitely more on that in this article, and then more coming next week. So start thinking about U.S. mining assets. I think this is going to be an important theme in 2025 when the permitting starts to get moved along and expedited, and the permitting outlook is much more favorable than it has been for a long time. Valuations will go up and money will start flowing into the sector and into these assets. And we saw an important project, the Stibnite gold project in Idaho, get permitted just recently, the last couple of months, right? So that is good news for mining in the U.S., and I think we're going to have more good news for mining in the U.S. throughout 2025. So India gold imports. So let's, we talked about copper. Let's talk about gold. So first thing, the gold chart. I did the presentation at MIF in Vancouver several weeks ago. Gold was about 27.20 or so at that time. The main focus of my presentation was what China's going to do, and President Trump and Chairman Xi, who is for all intents and purposes the president of China. I know they have a different system over there, but he's a leader of China. They've started to talk, but clearly this is like two boxing giants dancing around the ring, trying to measure one another before throwing the first big punches. And, you know, the punches will probably get thrown here in the next couple of months, right? But we're still in that dance period. But I think, you know, the big point I made, it took me a lot of thinking and a lot of research to get to this basically conclusion. You could call it a forecast too. And that is that China's going to have to revalue their currency higher in a consumption-based economy. So they're going to have to steer the aircraft carrier that is the Chinese economy more towards consumption. Devaluing their currency is not how you steer it towards consumption. That's how you get more of the same. More exports, more... you know, you're going to incite more ire from Trump if you devalue the yuan, right? So the conclusion is revalue it higher, like allow it to appreciate one way or another. Allow the Chinese currency, the CNY, to appreciate maybe even as much as 20% to 6 to 1 from the current 7.25 to 1. And then also just keep buying gold, right? So there's a graph, and we're seeing this. So here's India. So we're talking about China, and China is the bigger player, but there's India. They are importing a lot of gold. Now, the Asians, all the Asian cultures, I know that's a very broad term. There's way more Asians than there are Americans or even, you know, Europeans, right? But the Asians love gold. So whether it's Thailand or Vietnam or China or India or whatever, they love gold. They love gold way more than white people do, right? It's in their culture. It's very deeply entrenched in their culture. And I love that they love gold. And it's good to love gold. I love gold. Look at what India is doing. They're stockpiling gold, right? And now also, look at this graphic. This is from Citi as well. And notice how they've got unreported and reported gold buying. So the light blue is the reported, but look at the dark blue. The unreported is much bigger, right? In fact, look at this Q3 2024. The unreported far outweighed what was officially reported by these central banks, right? So this is official sector, central banks, right? It could be Poland central bank, it could be Russian central bank, it could be Chinese central bank, it could be Turkish central bank, but central bank gold buying, the unreported was like 8x of what they officially stated. Now, why would central banks be practicing a policy of stealth gold buying? Aren't they supposed to be open book? Aren't they supposed to let us know this is how much gold we have? Look at our vaults. Here's our financial statements, our balance sheet, right? Aren't they supposed to be transparent? No. Not when they want to buy more and they don't want to have to pay more for it. Right? Not when they haven't officially, disclosed the purpose of their gold accumulation, right? And so one of my other themes in that MIF presentation was that gold is one of China's trump cards, or Xi's trump cards. But let's call it China's trump cards, because let's say, the official gold holdings of the People's Bank of China is something like 2,300, 2,400 tons, metric tons. But really, their real holdings are probably 3x that. So let's call it 7,000 metric tons. The US is like a little over 8,000 tons, right? So China is almost at parity with the US in terms of total gold in its vaults. And I'm not going to argue about that if people say the US has no gold or whatever. This is my opinion. We're just going to leave it there. So if you don't agree, that's fine. You're entitled to your opinion. But that's my assessment, ballpark of the situation, right? But here's the trump card. The Chinese people own another 30,000 metric tons. What do the American people and the Canadian people own? Far less than that. Far less than that. I'm not sure what the numbers are. I'm not sure if we have an accurate take on that, but it's far less than that. So by getting the gold price up even higher, and there's a few ways they can do that. They can just keep buying, right? It doesn't have to be a one day gold is now $3,300 an ounce. No, they can just keep buying it and it can keep going up. And they can also revalue their currency higher. So gold will be worth more. The yuan will be worth more against the dollar. Chinese people are wealthier then, and they can consume more, right? There's a whole bunch of other levers the government can pull, including fiscal stimulus. But the big one is that the Chinese people own a huge amount of gold. And so higher gold price in dollars and yuan and other currencies make them wealthier and make them able to consume more. They feel wealthier, and maybe they'll spend more of their paper currency as they keep holding their gold as savings, right? And so this is important chart that the Indians, 1.4 billion people, the Chinese, 1.4 billion people, love gold. They're buying more gold than ever. Their central banks are buying gold. Seems like a bull market to me, a gold bull market. And then I look at the chart, lower left, back in August, 2,400 to upper right, 2,887 today. Cute little chart pattern. We had a consolidation. We had a pretty good drop after the election in the US in November. But look, it formed a cute little triangle, and it broke out again to new highs. And we are sitting basically at an all-time high in gold this weekend. So let's not overthink it. It's a bull market. It's a bull market. And gold miners are also in a bull market. Controversial statement. Now, that being said, I do want to say that all bull markets go through consolidations. We're up, what, $300 an ounce in 7 weeks? Yeah, I think that's what it is. About $300 an ounce in 7 weeks. That's a big move. That's a really big move. So could gold cool off here between 2,800 and 2,900 for a few weeks? Absolutely. And actually the seasonality kind of lends to the idea that February and March are usually not great months for gold. I mean, it doesn't mean that gold has to go down. It just probably we're not going to go to 3,000 in a straight line. We'll see. Then also, you know, I get all these comments about gold stocks, right? Like people love to, and this slide here is really highlights the imbalance, right? That there has to be a rebalancing, and this is one of Tariff Man's main objectives, is to rebalance the global trade and reduce the trade deficits that the U.S. has with many nations, particularly China. So let's talk about gold miners. Let's take a look at some charts. Stop looking at the GDX. Everybody looks at the GDX. The GDX is like ballpark 25% two stocks, Barrick and Newmont. So 1/4 of this index is just two companies, the two biggest gold producers in the world, that also have the biggest operational complexity, the biggest operational challenges, and some of the biggest higher cost mines in the sector, right? So why would you want to force yourself to eat exposure to all that by owning the GDX, right? So stop looking at the GDX. Stop focusing on the GDX. Agnico Eagle. So this is the number 3 gold producer across the globe, right? Much smaller than Newmont, but much more efficient, much better profitability metrics, and much better performer than Newmont. Again, lower left to upper right. So when people tell me, oh, gold stocks suck, gold stocks aren't performing well, gold stocks aren't doing well, I mean, what charts are you looking at and what stocks do you own? Because I look at some of the performance here, certainly since the end of 2024, just the last 6-7 weeks, the performance in the sector has been phenomenal, right? We've got a lot of stocks up 20, 30, even 40% in the last 6 weeks. So I know not all of them are up this much, but since when does every stock in a sector have to move with the sector, right? There's going to be winners and losers, right? It's a stock picker's market. So yeah, if you want to just own beta, gold miner beta, and just kind of be mediocre and suck, then just own the GDX. But if you actually want to make some alpha, you're going to have to pick some stocks, and you're going to have to look at the companies that perform the best and have the track record of performance and operational execution. And so you look at Agnico, you might even look at Anglogold, Ashanti, companies that are making new discoveries, that are thinking outside the box in old districts or even new districts. They made a big discovery in the Walker Lane trend in the last 5 years. And look at their performance, right? Really strong start to 2025 for AU. Kinross made a bold acquisition of the Great Bear project in Red Lake. Risky. A lot of people said, oh, that's going to turn out bad. Well, so far it's looking pretty good, right? It's looking pretty good. And Kinross is executing despite the fact that they lost one of their star assets in Russia because of the conflict in Ukraine in 2022, right? So this is a company that is executing and making higher highs. So the simplest way to evaluate a stock is it going up, right? Like, I know that's hard for some people, but here's a stock that's not going up. It's been going down. Freeport, they've got operational challenges, and they disappointed the market in terms of their production numbers last quarter, right? So they're going down. They've been going down. Gold IAG, here's one that's been going up, right? It's been consolidating a lot the last few months, but it looks like things are going pretty well at Côté. That's their big new mine in Ontario. It looks like things are going pretty well there. I'll have more on this one this week, and they'll be reporting earnings here shortly too. So we'll have a lot to talk about with IAG. But this is another stock that is lower left to upper right, making higher highs and higher lows. So let's not overthink it. If you own good stocks in the gold sector, you're doing well. Barrick has not been a good stock, and we know about their issues in Mali and et cetera, right? So it hasn't performed well. Newmont will report earnings here in the next couple of weeks. That'll be widely watched. I blogged about that on Friday. It's had a little bounce along with the sector. So the sector has had a strong start to 2025 with this $300 an ounce rally. But here, just from the technical standpoint, this could be just a weak bounce that Newmont has had. We need to see the quarter. We need to see them prove that they put some of their integration challenges behind them. I listened to the CEO do an interview last week in Africa, and I wasn't convinced by his tone and some of the language he used. So I got out of Newmont last week. I had a trade on here, took profits off the table here. Let's see how this one performs and see the quarter from them. But just from a technical standpoint, I wouldn't be surprised if this dead cat bounce sort of comes to an end here around 45, 46 in the Newmont chart. And then among the juniors, so again, the juniors have been the laggard, right? We can all agree the juniors have sucked for several years. Some people would say the juniors have sucked for a decade. Some might even say the juniors have sucked forever, okay? Whatever you want to say, that's fine. But here's a junior that hasn't sucked, Founders Metals, and look at that uptrend, right? It's now sporting a pretty hefty valuation, but I have to respect the trend of the results, the trend of the share price. I have to respect that Chris Taylor came on board, Founders Metals, right? So there's a lot of reasons to like this one, and I know it has some skeptics, and valuation is definitely not cheap, but if this is really a world-class gold asset, then the valuation could go even higher, right? And I think going back to my comments on gold, just the trend is one of the most powerful fundamentals that we can observe in any stock, and the trend is pretty clear on this one. Collective mining, CNL. So this has been a great winner for me the last few months. I've done a few interviews with Ari, the CEO and co-founder, and this one just keeps performing. The results are kind of mind-blowing. They've been so good. That being said, it's had a huge run, right? And that red candlestick there on Thursday definitely offers some pause. It's just one candlestick. It doesn't mean that much, and it's had other ones like that during the uptrend. But yeah, it's had a big run, and just sort of like my comments on gold and AEM, I wouldn't be surprised if we see some cooling off here in February, right? Just even some sideways action, would be healthy. Things don't go up in a straight line, and with CNL, we're looking at almost a double since October, right? So that's a big move. But that being said, the trend in this one is quite pronounced, and the very best assets don't get valued cheaply, and they don't transact at small prices. Okay. Cameco, this one is a little puzzling. I'm actually interested. I want to hear any of the uranium peeps in the comments, or send me an email. What's going on here? Because I look at the fundamentals in the sector, and they've never been better. The outlook has never been better. The fundamentals have never been better. Maybe the only thing that is not the best is the spot price, but we all know the spot price is not really the thing you should focus on always in this sector. I don't know. It's just a little puzzling to me because I feel like Cameco kind of should be at above $60 a share. It should be at highs. It's had a pretty good correction here the last few weeks, and it's hanging on to support. You could kind of draw a head and shoulders here, and it tested that neckline. It held it, but I don't know. It's a little puzzling. It's a little puzzling to me. Is it because of Kazakhstan? Is that it? I don't know. I don't proclaim to be an expert on the U sector. I definitely have knowledge about it. I followed it for a long time, but I don't profess to know everything. So I'm interested in hearing from you guys. All right. What's next? Is that it? Oh, gold producer earnings. So earnings in the gold miners will begin next week with Kinross, I believe Wednesday, and Agnico Thursday. Don't quote me on that, but I think that's what it is. And we're going to get a lot of gold producer earnings ahead, right? So Q4 2024 gold price averaged like $26.50 an ounce. That's an all-time high price and average selling price for the gold mining sector. So free cash flow margins, and shout out to Garrett Goggin for this graphic. Free cash flow margins, I mean, look at the trend in those free cash flow margins, and they're poised to just get better. So whether they were at 45% in Q3, they could be at 50% or even higher in Q4, right? And the GDX index, because of Barrick and because of Newmont and their operational issues and Barrick's issues in Mali, blah, 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 the GDX index, which we should not focus on, but it's there, has lagged. So there's an opportunity here for the gold miners to really continue to demonstrate this trend in free cash flow, in margins, and just profitability at these record gold prices. And really, it's earnings and profits that are the mother's milk of share price appreciation. It really is that simple. So I'm really eager to see these Q4 reports from the gold producers. And then final topic, go into biotech a little bit. GHRS. This one, all right, let's unpack this a little bit. They announced phase 2B results February 3rd, right? It's a phase 2B trial, right? That's a very advanced stage trial. It's right before phase 3, which is basically the final one. If you have a positive phase 3, you can submit your drug candidate for FDA approval. And certainly if you have a compelling set of phase 3 data, you're very likely to get full FDA approval, right? So phase 2B is a very important milestone for a clinical stage biotech company. So this one had a very positive phase 2B study. And this is, again, mental health drug candidate for the treatment of GAD, which is obviously a very big issue in today's society. And look at what the stock did. So I want to notice, just from a technical standpoint, notice the trend in the share price in January, right? So it bottomed around Christmas 2024, 672 a share, started moving up, right? So classic like tax loss, silly season buy in the final weeks of the year. And then a strong bounce to start January, and then it just kept trending up. And notice the day before they announced these really positive phase 2B trial results, boom, it was getting bought up. Isn't that interesting how good news tends to follow the preceding uptrend and a share price. And sometimes the opposite happens. So bad news follows a period of share price weakness ahead of the announcement of the news. So this one doubled on this phase 2B news. And then they announced, so here's the phase 2B news, February 3rd, February 4th. After the share price went absolutely bonkers, they did what any smart biotech, research company that's chewing through cash, its pre-revenue does. 150 million US public offering at $15 a share, and look what the share price did. So it went from 20.50 all the way back down to 12. It closed at 13.88 on Friday. But I find this one to be very interesting. Okay. 5-MeO drug candidate. I'm not going to go into all that detail. That would be a separate video, but just food for thought. Take a look at GHRS. Maybe put this one on your watch list. I think that cutting edge mental health therapies, like the one they have, GH001, stand to be big winners over the next few years, right? And so this one would be up there near the top of my list. And it's interesting because I read this research report, and that's sort of why I'm talking about it, from Water Tower. And they kind of make the point that Cybin, CYBN, it's like a 200 million market cap. This one is like a 700 million market cap. Cybin's entering phase 3. These guys just finished phase 2B, so they'll be entering phase 3. They just did this $150 million financing, so they're funded for their phase 3, I assume. Cybin has over 100 million in cash. They're probably fully funded for their phase 3 or close to fully funded for it. Yet the valuations are so different. So this research report makes the case for, based upon consensus revenue and EBITDA for full year 2030. So they're looking 5 years ahead, assuming that Cybin gets FDA approval for CYB003, okay, which is also the MDD market. Sorry, this is an MDD drug candidate, not a GAD drug candidate, MDD. Cybin is MDD as well. So they're taking a look at the comps, like the apples to apples, 200 million versus 700 million market cap. And actually the enterprise value is 89 million because Cybin has 100 million in cash, right? And they just see this as a valuation gap and an opportunity. That being said, Cybin traded pretty bad Thursday and Friday. It was starting to get some momentum on the RFK Junior news, but then it faded pretty hard there and dropped into the close along with the overall stock market. And you could just say, well, Cybin, it looks like the IWM chart, and it kind of does, right? So it's not really trading on its own fundamentals. It's just trading along with the small cap sector space more broadly. But as opposed to the GHRS chart, which was moving up into the good news, Cybin's moving down, right? So I point taken, it's a fair point here that there is a valuation gap, but maybe there's more than meets the eye to unpack why there is that valuation gap, right? Maybe it's the composition of matter for this drug candidate. The GH001 is much stronger and more robust than the composition of matter patent on CYB003, and that would require a much deeper discussion and maybe a biotech expert to sort of delve into that with me. But it's food for thought, and I think both CYBN and the GHRS stock should be on our radars, because I do think this mental health, this cutting edge mental health therapy space is exciting, and potentially with making health great again in America and the world, these companies will receive more investor attention over the coming months. And on that note, that's it for me. I think that's the last slide. Again, if you enjoy my content, if you got some value out of this video, if it made you think about something more deeply or maybe in a different way, please hit the like button and subscribe to Goldfinger Capital, and enjoy the Super Bowl and have a powerful trading week. Thank you.